for CEOs and millionaires. I've never seen my vision be more crystal clear. Look in the mirror, see the change in who I used to be. I kept going, knew success would come eventually. But ask about me back then, they said I wouldn't make it. Nowadays they doubt less and tend to ask for favors. Poetic music, that's realness, don't let them tell you different. And if you ever lost in doubt, then follow your intuition. These words of wisdom is for those who's trying to find their purpose. Don't be living just to die, cause only death is certain. I'm working hard so I can toast to my accomplishments. Cause see, I lost it all and I ain't been the same since. I'm more focused, more ambitious, more everything. Grew up with nothing, now I appreciate the finer things. I know it's real when at the shows they ask for autographs. And now they know the name, they ain't gotta ask. Yeah. They ain't gotta ask.
And we're rolling. Good morning. What's going on, everybody? This is Ben and Jordan back at it with the little business power hour here. We're just kind of going over a couple things. First, obviously, earnings season's going on right now. We got Bill Gates in the news, kind of fighting off intellectual property, dealing with the vaccine and pushing, things over to India where they could be like making more vaccine for the folks over there where they're having a really big issue right now. Over 17 million people have contracted the virus at some point. And then obviously we'll have some picks here late in the game on like what we're looking at in the market here. But good morning, everybody. And good morning, Jordan.
Good morning, man. Happy to be here.
Awesome, man. So with that going on, we got earnings season. I mean, we've got some crazy numbers coming out from Q1 as far as revenue goes for Facebook and Apple and all these other companies in the tech space that are really, really doing well as far as their cash flow is concerned. But there's also obviously some PR against each other based on data privacy here in the last, month or two. Facebook's very integrated into Apple's infrastructure from the hardware and from the App Store perspective. And if Facebook gets, for example, or even Alibaba, another one, if they get cut off at the rail, so to speak, on the infrastructure from the data perspective, how are they going to be able to sustain their business model in the future if they don't have the means to go through the App Store in that way, the privacy settings changing? Like from a small business perspective, Jordan, what do you obviously run a small business with the insurance company and whatnot. What do you think, like from your perspective, running a small business, how will that affect you if you can't retarget people across the internet that might be interested in your products?
Yeah, there's a lot of nuances to this. I mean, first off, this isn't the new change. So I think what you're referring to is iOS 14. And, like these kind of changes every time, because they happen all the time. And every time it does, it always seems unprecedented. I think, what was Google's one? I think Google's was called Penguin when they shifted that way. But I don't know how deep you want me to go into this, but
all the way.
Just go deep, Jordan. I think it's going to, I don't think it's going to be that big of a deal. So with the new changes, you are not able to track. It's going to affect some apps. You're limited to like 8 custom conversions as opposed to like, whatever, I think it was like unlimited.
Okay.
But I think there's going to be a new opportunity for pay-per-click. I think this it could potentially backfire on Apple. But I don't think it's going to be as significant as some publishers are making it out to be.
I totally agree with you on that. I'm kind of looking at the data and seeing even from my own personal history, like how much am I actually getting from these, they have like, if you ever use Facebook and use ads, they have a really robust system on the back end to market to potential clients, and they have an option where it's like third party systems, and so you can cater your ads to stay within the Facebook realm or try to go out to the third party. And generally I don't really get that much clicks from the third party stuff that they're referring to, where it goes around the internet. And like if
Right.
you're reading Architecture Digest and I'm a carpenter and I'm dealing with, like trying to get more business based on like design magazines and things like that. It doesn't relate in that same way. And it's very, very nuanced in how much you would get. Is the reach a little bit less? Absolutely. But when you look at what the general behavior of the consumers are, most people, and it's very demographics based, but they're either on the Facebook platform, either on Facebook itself, the older generation. Then you've got Instagram, which is continuously still growing. And then you have other ones that are around in that same area. And with that, you just tailor to the demographic that you're trying to shoot for. So for example, if I'm doing something for a younger based demographic, I'm definitely going to try to be on Snapchat or TikTok or something else. You cater to your audience and who you are trying to deal with in that capacity. So
I think there might be a silver lining too for a lot of companies in this. I think, for a while, Facebook advertising, it's been so easy for companies to do.
Yeah.
But the thing is, a lot of companies doing Facebook ads may not want to be doing Facebook ads. Maybe they shouldn't be, and I'll just give you an example. Let's talk about like the septic industry. If you're a B2C customer on the septic side and you need something, right, you probably need it right now. If you have a septic problem, those problems they really need to be solved like right now. Yeah. So you're probably going to go to Google, right? And you're probably going to look for a solution that can appear immediately. Whereas Facebook, like there's not too many things you would buy proactively as a septic consumer. Maybe, I don't know, I could be wrong, but or like if you're in the service industry, YouTube, I would be all over YouTube marketing right now. It's the highest penetration rate, and if you have a high ticket offer, YouTube's great. So I think if anything, this could be a blessing in disguise for some companies.
Yeah, absolutely. I just want. It's funny to me, like how folks, and I think you've seen it as well, like how like they've been in business for 15, 20 years and they don't want to change. And I think this is just one of those things, but on a corporate level, be like, well, you allowed us to do this for this long and we shouldn't have to change based on how much, market share we have and this and that. And be like, listen, we've built this system where all the infrastructure goes through the train station known as the App Store, or for Google for their their phones and things like that, going through the same way. They charge a premium for that, and obviously, but that's where most people are going to download those apps. They have also there was also security measures taken in place to make sure that apps are compliant with security protocol and everything else. Otherwise, you can't get your app on an app store based on that alone, as far as data protection and other things like that. And so that costs money to maintain, to manage, and things of that nature. And most people know that, everybody's like, it's like anything else in life, until something happens, nobody cares about security, whether it's on a physical sense, from a data sense, or anything else. And so at least Apple, at least you hope that they're taking the precautions to pre-screen and make sure that data and privacy and everything else is taken into account when these new apps continuously come along, and that they pass a threshold as far as that's concerned for the consumer. I'm not sure that happened before, when like Facebook was adding all those apps. That's how like the Cambridge Analytica came about and all that other stuff. So you look at the differences in how people view privacy and security, and you just want to make sure that you're picking the gatekeepers accurately to represent not only yourself but your products and the services that you're providing.
Yeah, for sure.
But yeah, some of these numbers are just astounding, as far as Apple, like they're just killing it from all angles as far as their products are concerned.
Mm-hmm.
I mean, they just came out with the new MacBook stuff and all the different colors, and I mean, they're really pushing that envelope. But like we've talked about before, this chip thing is not going away like anytime
No.
soon. And we've seen supply chains really be frustrated, from Tesla to the auto industry in general, computers and things of that nature. I'm baffled at the, I guess it's just the labor issue, and like why we don't have our own chip makers in-house in the United States. And I think like Apple with their IBM or their Intel, I can't remember which one they're working with, where they just said, like we're not going to deal with you. We're just going to build our own.
Yeah.
With that being said, I just wonder like how that's going to affect us moving forward and how we look at supply chain, but also being somewhat of a self-sustaining entity moving forward with having some of that offshore manufacturing production coming back to the United States in some capacity.
Yeah. I mean, there's so many things to unpack there. You're talking about earnings. It's usually the saying has always been sell in May and go away. And, you definitely do not want to be selling in May in 2021. I think, and you and I, we've talked about this before. This is going to be a bull market for all bull markets. I think what we're going to see over the next year, possibly 18 months, it's a huge melt up higher, a huge bull run. And, when I look at the markets, the saying that my mentor always used with me is tech leads the markets, semis, semis mean the semiconductors, semis lead tech. Tech leads the market, semis lead tech. And so those are the charts that I always tend to follow. And then, you were talking about manufacturing, like Peter Zeihan, check him out. Love that guy. He's written 3 solid books. The first one of his that I read was The Accidental Superpower. And if I've already brought this up before, I apologize. But he talks about how Mexico is actually stealing a lot of manufacturing capital from China, and how Mexico has the potential to become, the new China. And so I wondered when that would pick up, maybe not so much on the textile side, but if there was like potential on the tech side, if that could happen. So I thought that was interesting.
Yeah, definitely. And you're already starting to see it a little bit even in Asia, as people are diversifying their supply chains by going to Vietnam and going to Thailand and getting other countries that maybe have a little bit, because the Chinese labor force is actually becoming, they're almost outpricing themselves here very shortly, I think, where it's going to be just as, cost effective to move it and look for another spot as it would be to just do it in the United States. And so we're going to come to that conclusion here very shortly, because of the wages that just have been held down for our labor force. But at the same time, a lot of the labor force over there have a skill of some kind, like I think we have to, and this is where I always kind of wrestle with, is like, does the government get involved to help train people with certain skill sets to push our own agenda internally? Let's say we need more electricians or something like that. And rather than just letting people flounder, let's take some assessments and see who has the capacity and the aptitude to handle this and be able to run, let's say, a small crew of 10 and really push that in the sense of, you could run your own business, or you could be, like you were talking about, a solopreneur. If you're your own electrician and you just jump from job to job and you can handle things like that, and maybe hire 1 or 2 people, like that's a perfect scenario where you could be a 6-figure guy really easy, especially with this building phase right now, and these things ebb and flow. But I mean, you could kill it for a good bull run for like 3-4 years and live a good life afterwards.
Oh, speaking of China, this is huge news. Let's talk about this real quick. Did you see their population shrunk from 2019 to 2020?
No, I did not.
First time in I don't know how long. It went from like 1. Let me just find this, but
running out of women.
The reason population the reason why this is so huge is because this is official data, and anything that comes from China in the official capacity is worse than it really is, right? I mean, that's kind of, everyone on Wall Street knows it. You know, it's the worst kept secret, right? And so the Chinese government, I guess, has delayed the release of these numbers because, you know, so much of their fiscal policy, their finances, their projections, so much of that is based on the population. And, you know, of course, there's also, you know, their pride is involved. But Peter Zeihan, he talks about this in some of his books, just how, dude, they're Scrooge. You know, a lot of these countries that we think, I mean, like, as an American, I think we're so used to hearing the narrative that China's going to take over the world. You know, that's kind of like, you know, that there was a time, you know, you were viewed as so savvy and so intellectual if you could come up with some type of compliment for China at a cocktail party, you know. But I think like the median age is going to be 10 years older than the median age in America by 2040, I think.
Yeah.
So I thought that was fascinating.
Yeah, I mean, when you look at it, you can look at Japan as kind of maybe a precursor to what China is going to have to deal with an aging population. That one-child policy obviously has been detrimental to the growth, and I'm not sure, you know, like when you socio-engineer your society in that way, like you're finally, after 30 years of a potentially bad policy, you finally get to see that in that entirety, and they've kind of shot themselves in the foot as far as their overall plan moving forward, right? If you don't have a consistent, like what saves us, I think, is the potential of really the best and brightest generally moving to the United States, being trained in our universities and things like that. And then if they go back to their own home country, they have an affinity for the United States in that same facet, right? China doesn't seem to have that, and then they also don't have a migrant population that comes there and stays there at the same capacity. It's very insular as far as a society is concerned, and if you're going to do that and you have those kind of child policies, you really have to socio-engineer the future and like put people in the places to succeed. And I just think with their closed quasi-hybrid open market system, I mean, if you look at like Jack Ma, for example, who was their darling, and now you barely hear a peep from him based on you know, some controversial statements, that in itself, I think, is detrimental in the future, because anybody that has a different opinion is just going to be put by the wayside. But when you think about it from an intellectual perspective, liberal people within society dream and create companies. Generally, conservative people end up running them afterwards. When you look at their trajectory in the life flow of a business per se, because you bring in somebody that's very idealistic, they don't care about what numbers are, they don't care about the business perspectives and things like that. They're just dreaming, be like, yeah, we can do this, we can do that. And I see it a lot in Israel with a lot of startups, right, where they're just like very bright-eyed, bushy-tailed,
I could see
guys, like coming into the scene. They don't really care about the numbers, and you know, if they're raising money, for example, they're like, well, you just don't get my idea. And as opposed to that, and then usually what ends up happening is after things take off and there is some traction within a market or something else with that particular idea, what you kind of slowly start to see is that VCs and other people that are investing will start to place in people that have a background in business already. They've already done one, you know, exit, they've done this and that, and they really guide that particular guy's vision on a very, almost like a bicycle with training wheels, so to speak, to make sure that they're getting their investment back, for one, which is obviously smart, but they'll stack the board accordingly. And I mean, the biggest example of that is Steve Jobs. when they kicked him off
Yeah.
in 85, 86 timeframe because of just the radicalness of how he was dealing with stuff. And they wanted the business to succeed based on how things were going with the Macintosh and all that stuff. So it happens all the time. And if you limit that, let's say, for example, in China, like you can only steal so many ideas,
Yes.
and
Yes.
if you might have the technical know-how, but if you don't have those people that stay in that position to push the envelope as far as like to dream big and to really push into different realms in that sense, then you're going to get left behind the power curve in that sense. And I think that's where China definitely loses compared to the United States, where we're pushing for innovation on a constant basis. And I think it's almost natural, kind of like in nature, where I go back to like my trip to South Africa, like the environment and the cyclical process of life, and I look at a lot from nature in the same way as business, right? And supply chain, where like the changes in nature generally happen because of a scarcity in something, right? So let's take giraffes, for example. Like there used to be short neck giraffes. That's all there used to be. The taller ones ended up surviving because they were able to get to the plants that they needed to eat, right? And so the same thing with business and other things like that. China is just killing all the long neck giraffes, basically, as far as ideas and inceptions are concerned.
Yeah.
And it's gonna end up hurting them in the long run.
Yeah. As an entrepreneur, I'm going to take risk in an attempt to innovate.
Yeah.
In an attempt to make money. Before I start doing that, I need to know that whatever property I build, create, or whatever, I need to know that's going to be protected.
Yeah.
And if that's not going to happen, and if I can't control my own destiny, well, then I'm probably not going to do it there. I'm going to do it somewhere else.
Yeah, absolutely. And then that's the thing. Like I hate about some things about like U.S. corporations, for example. Be like, I think that the tax rate is a little bit low comparatively to what have you. But we as a society, we need, like, if you're gonna take the burden on of being a company that's been around for, let's say, like 20, 30 years, and you're making hand over fist as far as the value of your company is concerned, it's because of our system in place. And I'm okay with you making as much money as possible, but there's got to be some kind of regulatory means to kind of ensure that we have a process where we can continually prop up other companies to challenge you to be better. And like when you push the scale in your favor with lobbying and things of that nature, then it's not a free market anymore. That's kind of where I draw the line. Like, let the best competition win. And I'm all about competition, but the fact that there are more lobbyists than there are senators for like Amazon, that's kind of like, okay, now we're dealing with something that's a little bit different in the sense of the American spirit and
Right.
in that capacity.
Well, the U.S. corporate tax rate, I think it's one of the highest in the world, but the thing is, the tax code is so complicated, right? Yeah. To where you can apply 500 different, write-offs or whatever to make the effective rate, zero if you wanted to. But yeah,
I think the capital gains thing honestly is a good start. Like I think if you inherit like $1 million from your family or whatever else, like, okay, you up to 11 million, something like that, you're getting tax free anyway. But in a sense of, you personally didn't earn that, right? And like, why would you have a lower tax rate on, let's say, like putting money into the market, buying bonds, buying other things, than somebody that actually is putting in the sweat equity to build something, to have employees and things of that nature? It should be inverted. It should be, you should get tax breaks for running a business. And you do, obviously, in the United States, but in a sense of actually a profitable business, to show profit, you should get kind of a stair step, write-off system as far as even better than CapExing, even better than other things, because you are supporting the community by providing, let's say, like 10, 15, 20 jobs for that particular industry or what have you. That should be kind of where it's at, where they pay the 15%, as far as, because you're already paying that anyway with the Social Security and Medicare. Like I've had to do that with the folks, and as a business, you're paying 7% of that employee's taxes. Maybe that should be paid by the government if you have a small business of under 25 people or something like that, things like that, or you just get a rebate for it. Stuff like that, where I think they could really utilize and do a better job of making sure that the small businesses, which everybody says is like the backbone of America, like get a better, especially after this year. I look down my main street over here, and I just see like business after business just crumbling, and it's sad, it's just like, I love going to that restaurant. I love going to this, bookstore and just hanging out and having a coffee, that kind of thing. And none of that stuff is there anymore.
Yeah.
But yeah, speaking of Asia and other stuff, Bill Gates has been in the news regarding IP rights to the vaccine. Never mind that the vaccine was produced by the government. We were able to, like, collectively through the government R&D, was able to do that per se, but they're fighting over the intellectual property to be able to distribute vaccines over in Asia to help with India, for example, where the COVID virus has exploded. And if we don't help them from a universal standpoint, this virus is going to mutate where the vaccine is ineffective, and we're going to have to come back up with another one. So I'm just really interested in your take on when the government uses taxpayer money to create something of medical benefit for our society, and another person who nobody appointed Bill Gates as the vaccine czar of the earth, right? Like he just took this upon himself. Right. And I'm not looking at it really in a bad sense. Like somebody needed to probably jump in there with that kind of name brand cachet to really put the light on certain things like that. But at the same time, just because you're a billionaire and people know you doesn't mean you get carte blanche authority to speak for the United States, speak for, the government in that sense, to say like, no, we're not giving it up. Like, what are your thoughts on like that government citizen combination of trying to push that envelope in that sense?
Well, so how is it, how is it connected to India again?
So essentially we have the vaccine, like the IP to be able to send over there. So India could create their own generic version of the vaccine and get it out there as much as possible. And rather than have that happen, they want our pharmaceutical companies to create the vaccine and send it over rather than giving the formula up and doing it there.
Well, so what I think is so interesting is I feel like one of the biggest things that needs improved, we were just talking about taxes, right? And if I could change taxes, I would do it this way or whatever. Yeah. Well, one of the, and this isn't new. This isn't like every year and this gets debated, but one of the probably easiest ways to lower medication costs and prescription costs would be to adjust the regulation on pharmaceutical companies in the US. I think there's some type of restriction on what we import, right? Yeah. And I forget which politician said this. It was I think it was a Democrat, but basically he was like, if we can import fish and animals, and why can't we import drugs, right? Like, why can't we be more competitive? Yeah. And I do know there's several big name brands that come out of India. So I'm flabbergasted that India is in short supply of something like this. Obviously,
They just don't have the formula to do it. Like they have they have the manufacturing facilities for German equipment already sitting there. It's just a matter of them having the formula to act. It's like I have an oven and I know how to bake cookies,
right,
but I don't have the cookie dough.
Yeah.
Like.
Well, the other thing that kind of came to mind, when you start talking about private sector and public sector is, I'm kind of pulling us away from the whole vaccine, but like when you talk about automation, so automation in the workforce is kind of like the next frontier that people should probably be a little more worried about, but they're not, because, we think it's cool, but when you look at a lot of the big advances in automation, they've come from the government level, right? They've come from DARPA. That's been a huge one. Mm-hmm. And what makes it funny when you start circling all this and piecing it all together is DARPA is it's funded by taxpayers, right? Yeah. So the irony that certain advances that have come from DARPA that could potentially put certain industries, put those jobs maybe on the back burner, or put humans out of those, that could be funded by the person who lost their job. So it's almost like, do you approach that the way the UAE approaches it with oil and their citizens and stipends and,
I think at some point we might have to come up with some kind of sovereign wealth fund, and that inherently could pay for a lot of things that we want to try to correct in our system, whether it's healthcare, whether it's, some of the contracting stuff, as far as like proprietary information, things of that nature, like if a defense contractor has a certain thing and we're selling that to other countries, why isn't the US government putting away some of that cash that comes from the sale of some of our industry stuff into some kind of fund for the people per se? It doesn't have to be all of it. I know we need some revenue to manage the government effectively, but it just seems like we earmark that stuff years down the road, and it becomes convoluted in that sense. And just like the tax code stuff, like people just don't have the time or the interest to deal with it. And I think that's designed that way intentionally.
Sure.
Yeah, it's always like, we think about a lot of the cell phone technology that we have with the GPSs and things like that were all developed from the military. It was Apple and some of these other folks that put it in the phone. And that's how that stuff just came to be in the early 2000s in that sense. And then when the iPhone came out, that was it. I mean, it had everything you needed, but a lot of the GPS stuff came directly from the military technology and NASA.
Yeah. Well, I mean, like how often have you heard the term like military grade encryption?
If you only knew.
Yeah.
So, you were speaking before on like, keep everything going, no matter, obviously I think there's going to be a correction here, I would say within the next month or so of equities and things of that nature here. But, I'm looking at refinancing my house, and the rates are crazy. Like I got a 2.5% refi.
Yeah.
So I don't think those rates are changing from the government perspective. And I think, the risk premium on equities is going to be still low, going to be under 5%. So with that, and you're going to squat and hold here till probably the end of summer. Are you still, what are you looking at right now for managing your portfolio?
Yeah. Well, what do you mean when you say for managing my portfolio? Just like what stocks?
Yeah. Like what stocks, like what's interesting you right now to where you're going to throw, like you're going to readjust obviously when these numbers come out this last week or two here for Q1. What are you looking at trying to migrate to here in the next quarter?
Yeah, I like we kind of hit on this last time. I love commodities. Commodities are they're playing catch up, not going to play catch up. They're playing catch up right now. And what I love doing is I love taking two catalysts and blending them. Let me rephrase that. I love taking a company that, you know, has a solid business catalyst, and then is also doing something in an industry or a commodity that's surging. So maybe it's maybe it's a gold mine or a copper mine that has a unique edge, maybe, you know, some big government contract.
Yeah.
But then, you know, obviously if that sector is doing well in copper, then, you know, then that makes it even sweeter. One of the stocks I like right now, it's called, let me pull it up. Galaxy Digital. So Galaxy Digital is, it's an asset management firm, and what they do is they operate in the digital asset cryptocurrency space, you know, blockchain technology, and they basically help businesses. Now, I'm oversimplifying this way too much, but they help firms and businesses stay compliant, and not just stay compliant, but basically they help them apply blockchain technology to their existing business operation or infrastructure. And so I think that's really interesting. The ticker is BRPHF. And you know, it used to be, if you were a company and you even spoke about Bitcoin, you know, you were looked at like you were crazy.
Yeah.
And then it shifted to, okay, well, you at least need to have an opinion, right? You at least need to tell the public what you think. And now it's like, if you don't have a percentage of your company's treasury in Bitcoin, well, then, you know, you're playing a fool's game.
I was just going to ask you about that. Like, do you like the fact that some of these companies are actively purchasing Bitcoin to hedge on earnings and seeing?
Yeah. Well, and so what I recommend everyone do is take a look at the Michael Saylor story. You know, so Michael Saylor, the CEO of Microstrategy, one of the oldest CEOs, when I say oldest, one of the longest running CEOs of a publicly traded company. When Bitcoin was around 20K, he put $2 billion worth of, he took $2 billion from MicroStrategy and he bought Bitcoin. And this is not, I mean, this is a public company, right? And so he knew it was going to scare shareholders. Yeah. So he came up with this cool buyback program where he basically told his shareholders, look, I know some of you are going to be concerned by this. So if you want out, we'll buy back your shares at this price. We'll keep everybody happy. But if you don't want out, I think you're going to like what's going to happen. And so that 2 billion turned into over 5 billion in crypto, but something more interesting happened. MicroStrategy's stock price, I think it rose. I think it 10x'd. Wow. And if you can, let's see, MicroStrategy ticker. Let me pull this up. 5 years. Yeah. So in 2020, it was like 100, 115, 120 bucks. And it got as high as 1,034. So they've got basically a balance sheet that, you know, more than doubled. And then they have their company's market cap increased by size of 10. So I'm fascinated by that. I think more companies are going to start doing that.
Yeah, absolutely. I've even doing it on a small scale for our company here. Eventually, I look at the dips in the market and I'm looking at, I think I have a fundamental grasp of Bitcoin. Or just cryptocurrency in general. And I look at, you'll like this reference. I bet on the jockey and not the horse.
There you go.
And I look at who's pushing into it, and then who's obviously managing the crypto exchanges per se. So I'm like pretty big on Gemini. I like what they've been doing, the Winklevoss twins. And I am one of those big guys where like you got to have skin in the game. Like if you don't have skin in the game, then like there's a lot of people out there that will talk a good game about cryptocurrency, and then when they're so adamant in their belief in it, they're kind of the same way Tesla and some of these other kind of companies are, and they just believe in the product so much. But then when you ask them like, well, how much do you have committed? And they're like, oh, like 10 grand. And you're like, sorry, man, like I like your enthusiasm. They're like, well, I can't do that because I like, if you were that adamant about something, I would think that you would either get a HELOC and throw that money in there, do something else to like show me that even though you're cash strapped, that maybe you, I don't know, drive Uber on the weekends and like all that money goes straight into your cryptocurrency, wallet and things like that. That shows me that you believe in that product. But there's a lot of like fans on the sideline. They're doing a lot of cheering. Yeah. And I cannot grasp folks that don't put anything into it, but believe in something so entirely.
Yeah. Yeah. For me, just hearing Michael Saylor's talk, the biggest catalyst for him was he did the math. And if you don't know who he is, check him out. Insanely smart. The podcast he did with Sam Parr and Sean Puri on My First Million, it was hilarious. It was hilarious for a couple of reasons. One, like they tried to, if you ever hear Michael Saylor speak, I mean, I don't like, he sounds borderline, and I don't mean this. I don't want this to come out wrong. He kind of sounds borderline like autistic almost, but he's a genius. He's a genius. And they were trying to like bro him, right? Like they bring him on and they're trying to like, so are you a car guy? Cause I just bought, this AMG, and he's not in the mood to do the whole bro. I mean, that's just not who he is. And he goes, I'm actually more of a boat and plane kind of guy. I mean, just totally like, just kind of smacks him. But he said for him, it got to a point where the dollar was eroding so quickly that if your business wasn't generating a net profit of 20% or more, that you were essentially losing money. And most business owners don't even realize this because they're focusing on operations, not on, not on the dollar. So for me, it was, okay, I need to start focusing on velocity. I need to start treating my cash almost like a bankroll, almost like the same way a house flipper would, like I have $1 million, I'm going to flip it on this house and make 1.4 million and kind of do it. So
that's exactly how you have to look at it. And that's a tough thing for people that are transactionary in nature, where let's say like Amazon stock goes up, for example, they look at that and rather than diversifying or holding on to it and being able to leverage your securities in a certain way with margin or something else, like they just look at the binary ones and zeros, and they're not looking at book value versus market value and like what you can do with that. And that's frustrating when you bring other people on and they're not at the same level as you in that sense, because it creates friction in a sense of them not being acutely aware of a dollar's not worth a dollar to, like that's why we have all these formulas with like present value versus the value of your money down the way. Is that if you don't put that money somewhere, I just feel bad for like the American who saved money for like 50 years, and has
I know.
200 grand in there. And it's just like the value, like the purchasing power of that money is just gone.
Yeah. Well, and let me be clear. I don't think Bitcoin is the only medium, is the only asset where you can achieve that scale of velocity, right? If you decide to hold, some of your liquidity in a gold or a silver stock, and it, and you can tell that gold or silver has never been this cheap in X amount of years. Well, you're probably going to achieve some good velocity over the next, 12, 24 months.
between that and just having tactical patience, like this year has
Mm-hmm.
been such an anomaly that people like, if you're not getting a return of like 15-20% a year,
Yeah,
like you're pissed off. I'm like, go
I
fuck
know.
yourself, you know, like, you know what the average is, like, through time, like this
Right.
happens once every decade plus. Like, you got in on it, you're aware of it now,
Yeah.
and you're going to be holding the bag when other people start to dip out, and you're going to be pissed because you just kept your money stagnant in a
Yeah.
certain area of a market, right? And
Sure.
that's on you for not being like, hire somebody else to move your assets around accordingly. Or if you, I personally, and it seems like you as well, like to manage your own
Yeah.
risk in that sense, and being able to dip and dive, not having to call somebody and
Yeah.
do that in that sense. And I think once you take control of your own destiny in that way, you feel a lot better about life. And for me anyway.
Yeah. Yeah,
Um,
for sure.
um, no, I definitely agree. I think commodities is definitely the way to go right now, especially when you look at, for example, the building aspects of
Mm,
lumber being up the way it is, anything having to do with development right now, and then
yeah.
obviously this $2 trillion infrastructure package, like anything having to do with concrete, trucks, Caterpillar, things of that nature, where you're going to see a lot more companies buying these hard assets in that way. These companies are only going to surge in that process. And so, what I like to do sometimes is, and this is just for folks out there, think about how you would build a house, right? And all the steps in the process that it takes, and the touch points and the people that it takes to build that house. Think of yourself mentally like a general contractor and be like, okay, I gotta, dig a foundation, and I gotta fucking pour concrete, and I gotta do this, I gotta do that. But think about all the businesses that are involved along that process to build that house, and then start to backwards plan. Okay, Home Depot's one, this and that, and then start to
Yeah.
look at that from that perspective. And then obviously you have to do your homework on see what's overvalued and what can you ride the wave with versus what's undervalued right now because people haven't thought about it yet in that capacity. And I would hedge and put money in both, but
Mm-hmm.
obviously divide and conquer in a sense of putting money in the lower valued, like the undervalued, commodity or security or anything else. And then obviously having stuff that's riding the wave in that same capacity. So for
Mm-hmm.
example, for me, what I'm looking at is the country is going to open up here. I've been traveling. I went to Seattle. The planes are full,
Mm-hmm.
and we're sitting there with our masks and doing whatever we need to do, but the planes are full. So
Mm-hmm.
airline stocks, travel agencies are getting big again. And think about Expedia, think about Airbnb, think about hotels, some of these groups. I mean, those things are going to pop here in the near future again. And not so much in, I don't think, big cities, but just going back to your small towns and, these, I would call second tier cities just based on the size. So if you think about like Denver's a second tier city just based on, capacity of like 2 million people, right? But we have infrastructure for the mountains. We have other things where people are going to come and they just want to get away. So
Mm-hmm.
all that kind of stuff. Um, the one thing I'm looking at too is that some of these tech companies are flooded with cash. I'm almost guaranteeing a buyback of shares to keep
Mm-hmm.
the price going up. And so there'll be less volume out there as far as the supply goes from a share perspective. And Netflix has already talked about buying back stock to keep
Mm-hmm.
because their numbers are going down as far as their users and things like that. So they got to keep their stock price at a certain level to keep the cash within the companies. And so one way to do that from a strategic perspective is to do buybacks. Don't know how much, but these companies are flooded with cash, so you could see that being the catalyst to pushing the share price up for the people to stay around.
Mm-hmm.
Something to consider from that. So Apple has a ton of cash, Facebook has a ton of cash, Netflix has a ton of cash. We'll see where that goes from there as far as the streaming services and things are concerned. But that's something to consider looking forward as the shift focuses from staying home to like going out.
Mm-hmm.
That's what I'm looking at from the human behavior perspective.
Yeah.
Um, yeah. I'll definitely have to, when we do the video, I'll put the Galaxy Digital and Michael Saylors and that kind of stuff in the YouTube channel. That way that we can show folks and, you know, get some kind of thing going with that. And also might be a good opportunity, like to come up with like a read list of some of your favorite books.
Yeah.
Things like that.
I love doing that. I take reading recommendations very seriously, or book recommendations.
So I'll get it to where we can maybe do like a top 5 for the summer or something like that. And so you like, so it'd be a top 10, but like 5 from you, 5 from me. And then we'll just throw that out there for folks to be able to, you know, kind of channel and see what's out there as far as, you know, getting going. And, you know, the good thing about living in the States is it doesn't matter when you start. It just matters that you start.
Yep. Exactly. Exactly.
Well, awesome, man. Yeah, I think that about does it for this one here. Appreciate the time, everyone who's, you know, downloading and things like that. Yeah, I really appreciate your feedback and all that good stuff. And we'll get more video out here eventually, just with everything that's going on. It's just been kind of crazy in that sense. But looking forward to hearing from everybody. And thanks again. And thanks again, Jordan, for being around.
Yeah, man.
All right, man. Well, have a good weekend.
You too. Take care.
The show is produced and engineered by myself, Ben, out of Denver, Colorado. Be sure to subscribe to our social media or wherever you consume content, iTunes, Spotify, YouTube, etc. Big shout out to Mike Xavier. Thank you so much for letting us use your music as part of our show. Be sure to check him out as well on social media. And stay tuned for the next show.